Thanks very much to Kerry and for all of you today for giving me the opportunity to speak with you. The first slide here is actually a new map for us because on Friday we completed the acquisition of the Pogo gold mine up in Canada. So that's been a terrific acquisition for us, and overall it takes our profile to 850 to 900,000 ounces for this financial year ahead. One of the adages we have at Northern Star is we're a business first, a mining company second. And our last acquisition of an operating mine was Jundee some 4 years ago. During that period, the business development team that reports through to me has spent a lot of time, looking at acquisition opportunities. I have an expression, you've got to kiss a lot of frogs. What we have done is had the financial discipline to wait for the right opportunity. And, we think the wait was worth it for Pogo. And it was very gratifying for us to have the market cap step up upon the announcement of the transaction. And in terms of when we look at the strategy we've had at Northern Star around acquisitions, the narrative we've had to the market has always been around these Tier 1 jurisdictions. We use the Fraser Index definition for that, which basically centres on Australia, the US and Canada. There's 17 mines within that jurisdiction, and with the continued organic growth within the Northern Star organisation, we expect to have 3 of our mines sitting within that group. And that slightly expanded group, maybe 3 of the 20 world's top Tier 1 assets within our portfolio, which is a tremendous platform for Northern Star and its shareholders. And again, what does this translate in? It translates into tremendous financial outcomes for Northern Star. We're sitting on a 30% 5-year return on equity. It was around 25% this year, and it sits on the top of our peer group. Similarly, return on invested capital, 27% over a 5-year average, 28% in the last 12 months. Again, we are sector leading, and it's that discipline within the organisation around the financial returns that is a hallmark of Northern Star. What has that delivered to our shareholders? Well, if you look at the journey of Northern Star, we've raised about $444 million of equity over the journey. A lot of the 175 of that was just recently to support the Pogo transaction. We've returned around $250 million of dividends to shareholders during that time. That doesn't take into account that they are fully franked. Our market cap today is $5.3 billion. It's been an extraordinary value creation exercise for our shareholders, and it's done through focusing on our competitive advantages. The competitive advantages of being focused as underground miners and being productive in that mining by willing to invest in exploration and again, having this overlay of financial discipline within the organisation. This next slide is one of my favourites. It effectively shows how that value creation has come apart. And if you look at the top of this screen, there's the 3 assets mentioned, Paulsens, Jundee and the Kalgoorlie operations, and each of them have an IRR. That IRR generation is based on historic actual cash flows. It's not counting the next 10 years of horizon of cash flows we think for these assets. All of them have returned an IRR in excess of 100%. At Paulsens, 148% IRR. We bought that mine with just 45,000 ounces of reserves. It was us taking that view on the underground geology, on taking a view about what we could do with it operationally that created the opportunity for us and our shareholders. We ended up mining 614,000 ounces from that asset. In the end, it was about 16 times the amount of ounces we took out of that asset than when we acquired. And that's what propelled that terrific returns for shareholders. And we did it again with Jundee. We bought it with 411,000 ounces. Arguably played absolutely full value, if not overs, for that mine profile. However, we've mined to date 1 million ounces from that asset and have another 1.6 million ounces in reserves with, we think, really good visibility out beyond 10 years. Again, 7.5 times the reserve life than what we originally acquired. And then you look at Kalgoorlie, We bought 620,000 ounces. We've mined over 1 million ounces, 2 million ounces in reserves, over 6 times, or around 6 times, what we acquired there. All those mines, Paulson's we closed about 12 months ago, but both Jundee and Kalgoorlie would be closed today if it wasn't for the investment, the conviction that Northern Star, its board and its management had in developing the opportunity in these assets. And that's what I'm really proud about as a team at Northern Star, and the terrific culture that we have there, is it's the conviction. It's the conviction to take a view on the geology. It's a conviction to back ourselves in an opportunity to mine well, and then to pursue that and allocate capital to pursue those growth opportunities. And when we think about growth, we think about it on a per share basis. For the last 7 years since we've been an operator, year in and year out, we have walked up our reserves. So we've more than replaced depletion. We've kept running that run rate of reserve life in front of our mines. And on a per share basis, each year that's also increased, which is a really, again, important metric for us. Turning to the new mine, this is the Pogo Asset, which, as I said, we just completed on last Friday, which is a tremendous milestone for us. It's new for us in terms of stepping offshore, but I think from our perspective, it's right down the fairway for us. And I think that's the view of the market. This is buying in a tier 1 jurisdiction, buying off a major, beautifully run mine, beautifully capitalised, full of good people and good operational performance, immaculate safety and environmental record. What we think we can bring to that, though, is an increased focus on the disciplines and trying to increase productivities there. We also think we can reinvest in the drill bit. I think you're going to see basically a convoy of drill rigs heading up to Alaska right now, as we really have a great opportunity to unlock a lot of value at this site. And when we think about the playbook for us here, it's very similar to a Jundee. I know I've said this before, but what we want to focus in is these core competitive advantages we have. Working on increasing mine productivity, developing the exploration potential, and applying the financial disciplines we have. And that's very much the playbook we had at Jundee, and it's very much the playbook we have here, which is why it's down the fairway for us, this acquisition. And there's some differences between the way the North Americans operate and we operate. They use bolters. We'll typically use the jumbo gear to do the bolting. We think that creates an opportunity for us to increase productivity there. They have about 7 bolters operating. We think with reskilling those by introducing some Australian practices and some teams, we can walk that up. Similarly, this mine, it's been very horizontal historically. It starts to move a little bit more vertically there now, and we think we can apply additional long-hole stoping mining methodology to this mine. It already does that mining technique. It's quite an Australian operation when we compare it to some of the other North American assets we have. But as you'll probably appreciate, with long-hole open stoping on these vertical type orientation ore bodies, gravity becomes your friend. So it's a more efficient mining methodology, and again, we think we can increase productivity with that. When you look at Kalgoorlie and you look at Jundee, although you see the all-in sustaining cost drop under Northern Star ownership, we've actually done that by increasing the size of the workforce. We've decreased those costs by improving productivity and walking up the ounce profile, and again, this is the opportunity at Jundee. We're going to be focusing on opportunities to walk up the ounce profile here, do it productively, increase margins and create value for our shareholders. I talked about the vigorous screening process we have at Northern Star. It has been something that we take very seriously. We look at a lot of opportunities. We're lucky enough to get a lot of deal flow through the investment banks. But when we ran this through the 9 stages we have in terms of what we look at, this really did tick all the boxes for us. The commodity, the jurisdiction, it's a development asset. It's already developed. Its scale, the mining methods underground, the geology, the life it's got in terms of coming out of a major and being a well-run asset. When we went there in the due diligence, we didn't sit there going, oh gosh, we're going to have to turn this around. We saw a lot of opportunity, but we can focus now on that opportunity because the base operations there are terrific. We're going to keep the in situ teams in place. The general manager there has been there since the commencement of that mine. We want to actually, hopefully, draw upon the skills of the acquisition and the people we've bought, and then augment that with what Northern Star can add to that culture. We also want to bring some of the great things we see at Pogo back to Northern Star as well. And there's things that we can learn when we do these acquisitions as well, and we're very open to doing that. Look, another huge opportunity for us is the way they run this mine in terms of exploration. Sumitomo, who we bought it off, also, they typically don't own assets outside of Japan 100%. The mine they do have in Japan, runs about an ounce a tonne. It's one of the world's highest grade mines. And they used to set the cut-off mine for this Pogo mine from Tokyo at about 8.3 grams per tonne. That is a lot higher than what you would observe elsewhere in the mining sector. It gives us a tremendous opportunity to go back and revisit the mine plan, to revisit the way they classify resources and reserves. The two charts we have here, and I think it's the map you have on the right there, are intersections of greater than 7.6 grams per tonne. There's around 1,000 of those sitting in the, within the A-frame of the mine that have not been followed up. It's not in the resource, it's not in the reserve. We believe that's just an amazing opportunity to have that high quality grade material sitting within existing infrastructure available to tap, and that's why we have the conviction that we can turn this again into a plus 10-year mine and really grow that reserve base for our shareholders. And again, look, I've mentioned the parallels with Jundee. We think they're tremendous here. Again, it's around increasing that reserve base and the resources. It's having the conviction to invest in that, and you should have every confidence that, again, Northern Star has the conviction to continue to invest exploration dollars into its existing Australian asset base, but also into Pogo. And similarly, I talked about our cost structure. We'll be looking at walking the cost structure down there and doing that both by increasing productivity and also by lifting the ounce profile at the asset. I do want to take time within the Northern Star presentation also to kind of visit the existing assets because they are tremendous for us. They've been the backbone of the company for a number of years now. Jundee is producing for the year ahead a forecast of 280 to 300,000 ounces. Again, trying to get it into this top tier of plus 300,000 ounce mines in first tier jurisdictions, with an all-in sustaining cost in at around, say, Aussie $940. It's a very shallow mine. It only goes down to a basement of about 700 metres within the existing mine plan area. The exploration to date has really focused within that top 700 metres. So with that, what we have done earlier this year is we've drilled down about 1.3 kilometres there, and we've had a tremendous hit at depth at Zodiac. And with that, we think that really shows you that this centre is alive at depth, and it gives us another 700, 800 metres of potential opportunity to increase the life there. In addition, it continues to grow horizontally, and we continue to go into new mining areas like Revelation and Gringotts, which continues to be the backbone of the existing production. But we love the fact that we have this profile, we have this opportunity where we see this being a 5-10 year mine within the organisation. Kalgoorlie is the other core asset for us, a consolidated centre here. It's actually 4 mines and 2 mills. Collectively, we see that producing around 320 to 340,000 ounces in the year ahead, and doing that at a range of 1140 to about 1250 all-in sustaining cost. With this mine, there's effectively, as I said, we've got 2 mills. We've got the Kundana Bell mill that has the Kundana Bell underground feeding into it, and also takes in all the ore from our joint venture, 51% EKJV, which is operated by Northern Star. So that processes around 2 million tonnes per annum. That consumes most of that material. Then down to the south, we have the Jubilee Mill that takes ore from the underground next door, the HPJ mine, together with our newest mine that we developed just around hit commercial production in April 2018, the Millennium mine. So again, those two ore bodies feed that Jubilee Mill. Both our mills are full. We still do a little bit of toll treating for the additional material we produce, but collectively that gives us a focused, concentrated centre, all managed by Jim Coxon and his team out there. And it's again one of the bellwethers of Northern Star. Just to finish upon exploration, look, we spend $60 million in exploration this year. That was our budget before the acquisition of Pogo. You should expect that to walk up over the course of this year. We currently have about 16 of our team out at Pogo, and then we're basically kind of working out a new plan with the team on site there, the existing exploration team, and we really want to update that budget with them. But again, I talked about the conviction of Northern Star. I talked about that for 7 years in a row, that we've replaced our reserve more than what we've depleted it through, which are very fast mining rates. It's something that we continue to focus on. The lion's share gets applied to our in-mine opportunities, but we also continue to develop that near-mine regional opportunities, which can be future feedstocks for that existing infrastructure. So in conclusion, look, we're really satisfied with how we've built Northern Star over the last 10 years from an exploration company into Australia's second largest gold producer. We generate world-class financial returns through that period, and that financial discipline, the focus on rates of return and particularly return on equity, I think is one of the hallmarks of Northern Star, and we are best in sector at that. We've really focused on these Tier 1 jurisdictions. We think the Tier 1 jurisdictions, the ease of operations, the opportunity to apply your skill set to unlock value is what really attracts us to these Tier 1 jurisdictions. And of course, we want to have 3 plus 300,000 ounce mines, and our organic growth profile gives us the confidence we can deliver that across Australia and now with the US. We continue to grow the resource base and the reserve base. We're growing production guidance, 850 to 900,000 ounces, and we continue to believe we have opportunity to grow that organically. The balance sheet I haven't really touched on, but again, it's probably sector leading. We did raise 175 million for the acquisition, which is about 350 for the Pogo mine. The rest we funded out of existing cash resources because we have been generating free cash flow for a number of years. Our pro forma balance sheet at 30 June was about 263 million Aussie, no debt drawn, and we have about a $200 million working capital facility on top of that, together with ounces at surface that have no mining risk and could simply be put through a mill and turned into dollar. We have around 700 million of liquidity available to the company. And look, finally, I just want to conclude, we're very focused on what our strengths are, which is being a productive miner, focused on undergrounds, being willing to to invest in exploration, and we do that all with an overlay of financial discipline to reward our shareholders and reward all our stakeholders with the growth of Northern Star. Thank you.